Right now, Datavault AI, ticker DVLT, is in the middle of an absolute firestorm. The stock is trading at approximately $2.02, which is a staggering drop of about 20% or 50 cents a share just this morning. The market is clearly struggling to price this name, with shares having already swung wildly between a low of $1.80 and a high of $2.57 in the first few minutes of trading. The volume is astronomical, already registering over 117 million shares changing hands, which absolutely dwarfs its already high average. This isn't just movement. It's a full-blown battle for control, and it's happening because the company is caught between two completely opposite narratives, a catastrophic short seller report and simultaneously the announcement of a multi-billion-dollar licensing agreement. This is the definition of a high-stakes, high-risk scenario that you won't see in a blue chip like Apple stock. The general expectation for a stock like DVLT, which has run from just 25 cents to over $4 in the past year, is that it must be the next big thing in artificial intelligence. The narrative is all about Web 3.0, data monetization, and tokenization. Investors see the name and the sector, and they get excited, thinking this is their chance to get in on the ground floor. The reality, however, is that DVLT is currently one of the most contentious and volatile stocks on the entire market. The story here isn't a simple growth trajectory, it's a war between accusations of fraud and promises of immense transformative partnerships. What's happening today is a perfect example of this tension. The stock is collapsing under the weight of a report from just a few days ago, even as it's trying to rocket higher on news that could, in theory, justify a valuation many times its current level. This is where many retail traders, perhaps using platforms like the Robinhood app or SoFi Invest, can get into serious trouble, mistaking volatility for a clear signal. Let's break down the chaos, because there are three massive contradictory developments all hitting at once. First, the bad news. Just last week, on October 31st, the well-known short seller Wolfpack Research announced it had taken a short position in Datavault AI. This wasn't a quiet report, it was a direct hit. Wolfpack alleged the company was making empty claims about its AI and Web 3.0 capabilities, questioned the background of its CEO, Nathaniel Bradley, noting a past SEC settlement, and even claimed to have visited the company's Center for AI and Quantum Computing Excellence only to find a small, minimally staffed office. This is the kind of report that spooks investors, and it's a large part of the reason the stock has been under such immense pressure. Datavault, for its part, came out swinging. The company issued a formal response the same day, calling the report false and defamatory and a short and distort campaign, and stated its intention to pursue all legal remedies against Wolfpack. So you have a classic he said, she said, with the company's reputation on the line. As if that weren't enough, yesterday, on November 3rd, the company filed an 8K stating that it was terminating a previously announced stock purchase agreement to acquire a company called API Media Innovations. This termination, effective immediately, adds another layer of uncertainty. Why was the deal, signed back in July, suddenly called off? While the company stated there were no material termination penalties, it's another question mark for investors who are already trying to sort out fact from fiction. It makes the company's path forward look less clear and complicates the growth story. For someone managing their own portfolio, perhaps through a Fidelity brokerage account or using Schwab Intelligent Portfolios, this kind of news is a significant red flag that requires immediate attention. It's not the kind of thing you can just ignore and hope it goes away. But then, and this is what makes this stock so incredibly volatile, just this morning, a new press release hit the wire that completely contradicts the bearish narrative. Datavault AI announced it has granted a global exclusive license to Scilex Holding Company, ticker SCLX, for its proprietary AI-driven technology specifically for the biotech and biopharma sectors. And the terms are frankly, mind-boggling. The agreement includes potential cumulative sales milestone payments to Datavault AI of up to $2.55 billion. This is for a company with a market cap of roughly $500 million. This deal, if it pays out, would be a monumental success. To top off the surreal nature of these announcements, the company also announced yesterday a plan for a Dream Bowl 2026 meme coin to be airdropped to both DVLT and Scilex shareholders. So in the span of 72 hours, we have a devastating short report, a lawsuit threat, a canceled acquisition, a multi-billion-dollar licensing deal, and a meme coin. This is not normal market behavior. This is the kind of setup that professional traders using platforms like Interactive Brokers dream of because of the sheer volatility. But it's also a minefield for the average person doing some self-investing. The expectation is AI growth, but the reality is a high-stakes gamble. The question is no longer just, is their tech good? The question is, who wins this fight? Will the Wolfpack short report prove to be correct, revealing a house of cards? Or will this Scilex partnership prove to be the real deal, silencing the bears and justifying a massive re-rating of the stock? The 117 million shares traded this morning show that the market has absolutely no consensus. This is institutional capital and retail speculation colliding head-on. It's a far cry from the relative stability of a major NVIDIA stock or Tesla stock, which move on car deliveries and chip demand, not on allegations of fraud versus billion-dollar milestone promises. So, what does Datavault AI actually do? Peeling back the layers of press releases, the company, which was formerly known as Wyza Technologies, positions itself as a leader in AI-powered data monetization for the Web 3.0 environment. The core idea is that their platform can help companies visualize, value, and even tokenize their data as assets. They also have an acoustic science division with patented technologies for wireless audio transmission. The Scilex deal seems to be focused on the data science side, licensing Datavault's AI platform to create a biotech exchange. The company is trying to build platforms for various industries, from sports and entertainment to real estate and healthcare, all built on its information data exchange. The promise is huge, but the financials tell a different story. Looking at their last quarterly report for the period ending in June 2025, the numbers are just as extreme as the news flow. Revenue did grow an impressive 402% year-over-year to $1.74 million, but the company's operating expenses ballooned, and it posted a net loss of over $37 million for the quarter. Earnings per share are deeply negative. Perhaps most concerning is the balance sheet, which showed a very low cash position of just $662,000. This low cash figure is a major risk and helps explain why the company is so focused on striking large deals. It also helps explain the ownership structure. Shareholders have been massively diluted over the past year, with total shares outstanding growing by over 2,300%. This is a key part of the bear thesis that the company is funding its operations by continuously selling stock. The Scilex deal, which also involved an investment, makes Scilex a new 8% owner of the company, and insiders own a significant chunk, but institutional ownership from the big Fidelity mutual funds or Fidelity ETFs is very low, at under 5%. The big funds, by and large, are watching this one from the sidelines. I want you to comment below. Given this whiplash of news, are you buying the short report from Wolfpack or the billion-dollar promise from the Scilex deal? Let me know what you think of this battleground. Looking forward, the future of Datavault AI is a true binary outcome. There is no middle ground here. In one scenario, the Wolfpack report gains traction. The allegations about the CEO's past, the empty claims, and the massive dilution are validated. The Scilex deal turns out to be mostly hype, with milestones that are impossible to reach. In this reality, the stock, which has already fallen from its $4.10 high, could easily retest its 25-cent lows. The low cash position would become a critical issue, forcing more and more dilution until there is nothing left. This is the future the bears are betting on, and why they are willing to short the stock even as it announces massive news. They simply do not believe the announcements. In the second scenario, the company successfully sues Wolfpack and disproves their claims. The Scilex partnership is legitimate, and the milestones begin to be met, triggering large cash payments to Datavault. This would solve their balance sheet problem overnight and validate their entire business model. The meme coin turns out to be a clever marketing gimmick that draws more attention to their tokenization platform. The analyst ratings, which are wildly split, but include a moderate buy and a strong buy rating with price targets at